This week's market crash has sent shockwaves through the financial world, and honestly, it's hard to ignore the chaos. Let's break down what's been happening, shall we? First off, we've seen some wild headlines about escalating trade wars, which definitely rattled investors. Tensions between major economies are heating up, and that uncertainty makes everyone a bit jumpy, right? Then there's the crypto scene, which has taken a nosedive. With so much volatility, it's like a roller coaster ride that nobody signed up for. Now, what does this mean for you as an investor? Well, it's time to take a deep breath and reassess your strategy. This crash could be a golden opportunity to snag some undervalued assets if you're willing to take a risk. But of course, it's crucial to stay informed and not let panic dictate your decisions. In short, while the market's been on a wild ride this week, staying calm and collected can help you navigate these choppy waters. Keep your eyes peeled for potential rebounds, and remember, it's all about playing the long game. Remember 2021, the year of the digital gold rush? Apes, punks, and pixelated rocks selling for millions. It felt like a wild, unstoppable party, but every party has to end. And for the speculative NFT market, the music stopped hard in 2025. What happened? It wasn't just another crypto winter. This was a perfect storm. It started with global economics. Escalating trade tensions, particularly threats of massive new tariffs, sent shockwaves through the entire financial system. Traditional markets tumbled, wiping out trillions in value. And when the stock market sneezes, the crypto market catches a full-blown flu. This panic, combined with aggressive regulatory crackdowns from major world economies, created a tidal wave that completely submerged the hype-driven NFT space. Over $18 billion in market value, gone, just like that. For a moment, it looked like the end of the NFT experiment. Mainstream media was quick to write the obituaries, calling it a failed fad, a digital tulip mania. But they were wrong. What looked like a death was actually a rebirth. This crash wasn't an ending, it was a purification. It burned away the fluff, the quick flips, and the projects with no substance, paving the way for something far more powerful: utility. While the speculative JPGs were crashing and burning, a new kind of NFT was quietly surging. Investors, burned by the hype, started asking a simple but revolutionary question: what does this NFT actually do? They were no longer satisfied with just a cool picture. They wanted real-world value, tangible benefits, and a reason for their digital asset to exist beyond just speculation. This was the start of the utility-first renaissance. So what does a utility NFT even look like? Well, they're everywhere now, and they generally fall into three major categories. First, you have intellectual property and licensing. Imagine owning a piece of your favorite song. Not just a recording, but an NFT that grants you a share of its royalties. Every time that song is streamed, played on the radio, or used in a movie, a fraction of the earnings lands directly in your crypto wallet. Artists like Ray C were pioneers in this space, but now it's becoming the standard. Creators are tokenizing everything from film rights to book royalties, giving fans a chance to become true stakeholders in the art they love. It's a fundamental shift in the power dynamic between creators and consumers. The second pillar is what we call Fidgetal tokenization. That's physical plus digital. Think of a luxury watch from a brand like Rolex or a rare bottle of wine. In the past, proving its authenticity and ownership history was a messy process involving paper certificates that could be lost or faked. Now, that item comes with an NFT. This digital twin lives on the blockchain, providing an unbreakable, transparent record of its entire life story, from creation to every time it's been sold. This isn't just for luxury goods. We're seeing real estate deeds, high-end art, and even collectible sneakers being tokenized. This Fidgetal link guarantees authenticity and makes transferring ownership as easy as sending a crypto transaction. It bridges the gap between the tangible world and the digital one. The third, and perhaps most exciting pillar, is the rise of dynamic, AI evolving NFTs. These aren't static images. They are living digital assets that change and evolve based on real-world data or your interaction with them. Imagine a digital piece of art that changes its colors based on the weather in your city, or a gaming character NFT that gains new skills and visually levels up as you complete quests in a game. Some NFTs are even tied to financial data, their appearance shifting with the stock market. These assets are alive, interactive, and create a deep, ongoing connection with their owners. It's no longer just something you own, it's something you experience. This massive shift to utility also caused a tectonic shift in the blockchain world itself. During the boom, everyone flocked to Ethereum, despite its high gas fees. But when the market crashed and developers had to focus on sustainable business models, efficiency became king. Projects started migrating to blockchains that offered low fees, high speeds, and a commitment to sustainability. Networks like Solana saw a massive influx of new projects. Why? Because if your utility NFT involves frequent transactions like royalty payouts or game interactions, you can't afford to pay hundreds of dollars in gas fees. The new landscape favored practicality over legacy. Regulation, which was the trigger for the crash, ironically became the foundation for the new market. The stricter rules forced projects to be legitimate. They had to prove their value and operate within legal frameworks. This pushed out the bad actors and built a level of trust that was missing in the early days. We also saw a huge push for interoperability. The idea that your NFT shouldn't be locked into one single platform or game. Standards are now emerging that allow you to take your digital assets, your character, your verified concert ticket, across different virtual worlds and applications. Your digital identity is becoming truly portable. At its core, the message from the 2025 crash was clear: connect to the real world. In a climate of uncertainty, with global powers creating unpredictable policies, buyers want stability. They want assets that provide continuous, real-world benefits. An NFT that grants you lifetime access to a festival, a token that represents ownership in a rental property, or a digital collectible that earns you loyalty points at your favorite coffee shop. These are the assets that thrived. They offer value that isn't dependent on market hype or speculative bubbles. The NFT market didn't die in 2025. It grew up. The speculators and gamblers moved on, looking for the next shiny object. What they left behind is a mature ecosystem, a community of builders, creators, and investors focused on one thing: creating real, lasting value. The age of JPGs is over. The age of utility is here. And it is building a future where digital ownership is seamlessly woven into the fabric of our everyday lives. The Renaissance is just beginning. Thanks so much for watching. What kind of utility NFTs are you most excited about? Let me know in the comments below. And if you enjoyed this deep dive, don't forget to hit that subscribe button and ring the bell so you don't miss our next look into the future of tech. See you in the next one.